Superclusters is the podcast to demystify the secrets, stories, and tactics behind the money that moves the venture capital.
So, we have an hour on the clock, and indubitably, we will run out of time before we run out of questions. But nevertheless, that doesn't mean we can try our best to catch them all. Today, stylistically, we're taking a departure from what we're all used to, and we have 4 categories with 4 questions each. You can probably guess where we're going here. Ranging from deals to portfolio construction to belly up to miscellaneous, with 4 price points, each from $100 to $500. And the goal for each of our contestants today is to answer as many questions as possible and to bring home as much in the money bag as possible, even if metaphorically. Naturally, depending on the dollars associated with each question, some questions might vary in difficulty. And so instead of buzzers, what we'll do is, since I haven't validated the parking of our guests today, we'll play with the mute and unmute button. And at the start of each question, our guests will mute their mics. And once the question is read, whoever unmutes it first has the chance to answer first. There is no right or wrong answer for a lot of these questions. But for some of these questions, these will get personal, spicy. If no one else answers, we will move on to the next set of questions. And at the end of the day, we'll see who has the most money in the bank. And I will be your steward, your shepherd, your game show host for today. And the goal today is to get some interesting nuggets never heard before in a public space before on the shot clock. So Beezer, Chris, you ready? I think you're both muted. You're playing the game early already.
I was just saying, I think in the beginning, in your intro, you said, got to catch them all. I feel like I'm on Pokemon all of a sudden. I got to get my Pokemon Go set up. So it's great to be here, though, and great to be here with Beezer. And I usually like to trash talk a little bit during games, but how could anybody trash talk Beezer, who's like one of my favorite people in the world? So great to be on here with both you guys.
This is so much fun. You know, Chris and I are separated at birth through different families, so being together again is awesome. Thank you for doing this, David.
Beezer, if you didn't say that separated at birth line, I would have said it for both of you, because both of you have told me independently that you guys are brother and sister separated at birth. And Chris, you've also got the Ash Ketchum hat as well. So you've got it all down. For those not watching on YouTube, you're missing out something special here, because there may be some things we might include that were before the recording clicked, so to speak. But nevertheless, to dive into all of this, both of you have fascinatingly storied careers allocating to the venture space. But for those in our audience who have yet to tune into season 1's episode 1 and 2, respectively, on this show, and haven't allocated nearly enough calories to both of your accolades in your venture and allocator space, could you give us just a vignette or something that people don't know about you, despite you being on literally every single podcast, every single blog post, every single Twitter thread out there? So to start things off, Beezer, why don't we start with you, and then we'll move on to Chris.
Okay, so raise the bar. So I've chatted about my too long time in working since I'm old. But one of the things I haven't shared is that in high school and college, I really, really, really wanted to grow up to be Jacques Cousteau. And I've had a long time passion and love for marine mammals, and spent one summer working at a marine lab in Hawaii doing dolphin stuff. And I thought it was going to be cool to be Jacques Cousteau. I'd swim with them, we'd talk. I was basically checking fecal matter and water temperature in their environments, and kind of decided that might not be my future career. But I still would like to reborn as Jacques Cousteau if there's ever an option for a next life, because I still think he's one of the world's best.
You may have, I had a question lined up for the very end of this conversation, but you may have witnessed the crystal ball here, and you might have answered that. So I'm going to have to switch up my question at the very end. But Chris, how about you? You're on mute, by the way. You're playing the game very, very well, but I fear that you might lose out on points when Beezer just unmutes and you're on mute the entire time.
It's hilarious, though, because I actually have a T-shirt that one of my kids got me that said "You're on mute." So, I'm still getting the hang of the Zoom thing. So, anyhow, Beezer's story is so much more noble and interesting than mine. What I was going to say is something that not a lot of people know about me is that when I was in college, I co-founded with a couple buddies a humor magazine. And it was a tabloid style, it looked like the New York Post, but zany takes on life at Yale. So somebody found a 23-inch French fry in the dining hall. But I guess my first story which, is still in kind of Yale library lore, is that Yale has a set of Sports Illustrated swimsuit issues, but they're in locked stacks. And so being the investigative journalist that I am, I tried to figure out why they were in the Zeta stacks in Sterling Library. And to start my journey, I said, I went to the then new Orbis card catalog, which was our electronic card catalog. And I typed in Sports Illustrated swimsuit, and I got a record that came up with the Dewey Decimals and everything. And at the bottom, it said in the notes, please note, some issues may be mutilated and or stained. And at that moment, I realized maybe I shouldn't go looking for them in the Zeta stacks, and that they should be left for future scholars. But I published that article and then got actually asked to leave my library job. So that was the end of my my $4.15 an hour job in college.
That is hilarious. Beezer, did you know this?
No. I love
That's
it.
deep in the vault.
Well, now it's public, so welcome to the vault.
The world knows. The world knows. This will show up on OpenLP as the retweet of like Chris has shared it never before. Like, this is a tabloid in the making, right? Like, this is straight up Entertainment Weekly. But for actually, like, Beezer, is OpenLP ever going to do like the equivalent of like Entertainment Weekly?
Oh, I don't know, but that's a great idea. Maybe. Check back later and see.
Issue number 1 with Chris.
Issue number 1.
I would say that, there was a time when I wanted to actually, a friend of mine is a TV writer, and she and I were talking about doing like a short Netflix series, like a 10-episode series called Endowment Office, all about allocators and like the dramas and excitement. But then we realized it was probably too racy for Netflix.
That's being sarcastic.
I'm glad you figured that out. I'm glad you figured that out.
Actually, the reality is it probably wouldn't be racy enough, and about 13 people in the world would really, really enjoy it, and nobody else would really enjoy it. But I think that's where we're headed with content.
I dig it. All right. Speaking of content, I think we should dive straight first into all this. So for now, for both Beezer and Chris, I'm going to share my screen here. But for those watching on the YouTubeverse, Tyler, my editor, has got our backs when it comes to putting on makeup before we walk out of the front door. So it'll look a little bit better than the kind of screen I'm sharing with Beezer and Chris. But nevertheless, we dive into it. Ladies first to start with. Beezer, do you want to pick a set of questions from deals to portfolio construction to belly up to miscellaneous? Pick a point and pick a category you want to get into.
Okay, let's start in the first line to keep things hopefully simple. But if I bail on this, it will not be true. Portfolio construction for 100.
Amazing. All right, I'm gonna have you go on mute so I can see like both of your mute and unmute buttons. Who's faster? Who's got the faster reflexes with their children? So, portfolio construction for $100. Quick question, concentrated or diversified portfolios? Beezer, that's you first.
Am I supposed to say what they are or what I like about it? What are the rules? Sorry.
What do you like about it? What do you like? Some of these questions will be a little bit more verbose. This is more of the simpler questions.
Oh, I think if you're overly concentrated, you better be damn good at your job because you just raised the bar too high. That's my spicy take.
All right.
I like that spicy take. I will say that conviction drives concentration, and that you should be so concentrated as to be uncomfortable, because otherwise you're diversified, not diversified.
These are all tweetable moments. Like, I hope. Okay, so we're just going to collect all of these, and these are all just going to be like tweets we put out either with the episode leading up to the episode. We have a gold mine's worth of content here. But both of you are much better on the 140 characters than I am. I'm more long.
Oh, I don't know. Chris, I might both be out of jobs tomorrow, but we'll see what happens.
All right, Beezer, you got the first question, so that means you keep going. Pick another category, or pick the same category in a different, set of numbers, points, dollar signs.
Let's jump around. Let's do belly up for 200.
Belly up for 200. I'm going to have you go back on mute, and then so we can see all this. Belly up for 200. This is, what's the first ever fund you invested in, and how often do you keep in touch with them today? Beezer, you again.
Alchemist. And oh my, I kid you not. And to be totally
and this is not a paid
fair,
endorsement by any chance.
Not a paid endorsement. To be totally fair, I had not joined the Sapphire Partners team yet. This was a it was Alchemist tied with something else that was a pre-existing investment that was made by the team as I was organizing, and then I joined. But for the purpose of this, I'm going to say Alchemist.
Amazing. And before Chris answers over here, how often do you keep in touch with them today?
Well, if you
I'm saying in third. I'm talking about this in third person. Yeah.
If you count, then I would say, how often do we talk? I don't know. We email frequently. We tweet.
Oh, we do. Damn it. Okay, fine. That's fair. That's fair. I wasn't easy out there. Okay. Chris, you?
So for me, I think the first investment memo that I signed off on, not signing off, the decision was done elsewhere, but I was actually involved in, was General Catalyst back in 2001. And I had actually known the GC guys since before I went to business school in 99, when I was actually thinking about going to work for a company that David Fialco is involved in. And I said, no, I'm going to go to business school instead. And for those of you who know Fialco, you get this. Fialco goes, Douvos, what's the matter with you? Going to business school now in 1999 is like studying geology during the gold rush. You're going to be sitting behind a desk and all your friends are going to be rich. And I was like, oh, I made the wrong choice. But 2 years later, I invested in this fund, and they did great for us. And I'm in touch with different people from General Catalyst, probably like once every 2 to 3 weeks. Although we're no longer investors in the fund, as they've gotten outside of our investing mandate.
Beezer, you did the last question. You answered first, so it's still you. Chris, you got to be faster on the thumbs here.
I know.
Deals for 100. I'm sure Chris is going to smoke me on this. He's a great deal guy.
All right, deals for 100. Name a fund you passed on but regret that you did. Chris, you first.
I feel like you see these people on Jeopardy like murdering the buttons, and I feel like that. So in 2004, I was just leaving Princeton's endowment. One of the last things across the desk was Excel, and that was whatever the numeral was. And we said no for a variety of reasons. And then a few weeks later, I was at TIFF, and they were in our portfolio, and I said no again. So I said no twice to the Facebook fund. So I regret that.
You should get extra points to make up for that.
Exactly.
No, there's no brownie points here. It's straight up cold, hard truths. Who's the faster on the fingers here?
Well, I can tell you my sob story, so then at least you emotionally feel better. One of the first funds that we also bumped into, and I shouldn't say bumped into, we were introduced to a lovely connection who was very thoughtful. When I started at Sapphire Partners, was the first initialized, $8 million, $9 million fund. It was, very, very small. And we were focused on Series A. The target was more like 75 to 125 million. So it was out of scope, but obviously super interesting, super great. Met Gary, and was like, oh, obviously a huge thing. Passed. So that was done. Should have made an exception.
And that was the fund, if I remember, Coinbase was in, and they just kept doubling down on that one, right?
Oh yes, you can find the public records of it, but it was a big mess. Yes, they've publicly disclosed how much they made.
I think so. We might pull this up, but I want to say last time I saw the numbers for this, I think Harry Stebbings put like a tweet out of this out there. It's like initialized fund one, here are the returns, here are what they invested in, and actually Harry has a great set of tweets on just like fund returns across different vintages and all that. So it's a great story, and a lot of lessons to be learned there. Out of curiosity, both for Excel as well as initialized, it sounds like for initialized, the trigger was just like, hey, this is not within our usual fund mandate, and this was just outside of our scope. But correct me if I'm wrong here, Beezer, by the way.
Yeah, we literally just started, so it was also, I was too green to be like, this is when you need to make an exception, because you want to come out and to be a strong fiduciary for our LP, you want to do what you said you're going to do. And it felt awkward to suddenly go completely off piste, but should have figured out how to do it.
That's fair. Chris, what was your reason for passing on both the Facebook funds?
Because I'm stupid. I don't know. I will tell you, I could go into it, but the best I once explained my rationale almost as like a confessional to Dave Marquardt, who was this like longtime, kind of venture genius and early Microsoft investor on the board of Microsoft for 30 years. And I told him, we were talking about it, and I said, what did I miss? And he said, you know what, you're a well-trained institutional investor, and your decision was precisely right and exactly wrong. And sometimes that happens in this business. Sometimes good decisions have bad outcomes, and bad decisions have good outcomes. Not saying that was either a good or a bad decision, but part of what happens is you make decisions under uncertainty, and you make the best decision you can with the information you have, and there's just too much opacity for me.
First of all, that makes so much sense. And I'm just still wrestling with that comment of being precisely right, but exactly wrong. I will also say as a sub comment to that part of me is actually glad that you stopped writing at Super LP in 2017 and you've gone on the Twitter world, because you are fueling us with real worthy content, as well as 140 characters worth of great content. So thank you so much. All right, Chris, you were the first on the last one. Chris, I'm going to let you pick the next question here.
Let's break the seal on miscellaneous for 100, David.
Miscellaneous for 100. All right. What's your favorite term in the LPA? There are smiles for those who cannot see.
Can I anti-answer and just say it needs so desperately to be rewritten soup to nuts into legible, plain English format and take out all the extraneous things that are just so much unnecessary legally. Sorry, that's not the right answer, but that's my favorite thing about it would be to redo it.
Ooh, so a safe note, but for LPAs. Maybe.
Just something in plain English that takes out all the... Chris is going to remember the history of the LPA better than me. It feels like it was appropriated from private equity land and then has just sort of been it's like when you keep rebuilding something without actually just redoing the foundations. It just needs to be gutted and remade and made in language people can understand, so everyone's not at the mercy of somebody translating it. I cannot tell you the number of times we've had conversations between lawyers and GPs saying, it says this, and someone else is like, no, it reads this. And you're like, this shouldn't be a question, right? Two intelligent people should be able to read it and understand it.
I've never used the word favorite in any proximity to the word phrase LPA ever. So this question does not compute.
Okay, that's fair. No points across the board here. Chris, we'll go back to you, but actually harkening back to what Beezer just mentioned in terms of legalese, there is I was reading this side letter as of late, and one of the things on the side letter is hey, we're expecting all these different things. This is from someone else's side letter, but these are all the things that we're expecting to have, right? All the below. And then there were a bunch of bullet points of things they were expecting to be fulfilled in the side letter, and there were different provisions and all that kind of stuff. And the big debate when it came to the lawyers of debating what the side letter said was, do these bullet points mean and or? And that was a huge contention point, at least between the LPs and the GPs.
Well, I'll tell you, one of my very first experiences with LPAs was, at Princeton, we took the docs really seriously. And the guy who ran private equity for us, Dan Fader, had been a lawyer, so he loved digging in. And our law firm, Oric, who was quite good, produced a 7-page memo when we looked at the Sequoia 2003 fund. And we sent that to Sequoia as, here are Princeton's comments. And we get a call back from Doug Leone, and he said, hey, I don't think you know how this works. You take it or you leave it, Chief. And that was about it. So it was at that moment I realized that LPAs are all relative.
That makes... I could totally imagine it in Doug's voice as well. Okay, so to move things along, Chris... ball's back up to you, so feel free to pick another one.
Let's go miscellaneous for 500.
Okay. This is our first 500 in the ring here. So miscellaneous for 500. What's a piece of advice that a GP you've invested in has shared with you that has helped you become a better investor or professional or human being today? Chris, you first.
I love the premise of the question. It's so sweet almost. I will tell you that something that a GP shared with me once a long time ago that made me a better investor was in about 2002 or 2003, somebody said to me, you have no idea how many people in this business are retired on the job or calling it rich. And that has given me a jaundiced eye toward towards investors ever since. And so maybe not the like happy, outcome, but it's made me a better investor because I, sometimes, treat GPs like I treat my teenage children, which is, every word out of a teenager's mouth is probably a lie designed to make them look better or to hide some malfeasance.
Okay, so I'm going to double down on the sad and cynical, and then I've got another piece of uplift. So my sad and cynical is that, yes, different but similar to Chris, I remember a GP left a firm and the LPs were all like, oh my God, we didn't see it coming. And then pretty much every other GP we talked to was like, oh yeah, everybody knew for like months. And I was like, what? Like, what's up with the references? And they're like, oh no, not our story to tell. And I get it. Like, I completely get it. Like, there's some times where people's information is very private and very confidential. But it also means when you're doing references, you're like, you understand you're just not going to get the full story. And you just have to accept that, much like to Chris's comment, that there are people are going to know way more than they're going to feel at liberty to tell for good reasons and for some reasons that make you raise your eyebrows. But notwithstanding it, you just know it's true. In the uplifting and heartwarming bucket, one of my favorite pieces of advice actually was advice that Chris got from somebody, but I want to appropriate it and take it as my own when you were told to invest courageously, because in this world of trying to pick in a blind pool and make sense out of really very few data points and wanting to work with wonderful people, investing courageously, I'm always like, yes, this is what Chris was told. He's a great LP. We're gonna appropriate the advice and pretend it was given to us. So I use that.
That is awesome. And you can use any of my rhetoric anytime, Beezer, because I use yours all the time.
This is what I mean. This is like brother, sister separated at birth moment right here.
Except we actually fight less than real siblings, so maybe we should.
That's because we don't have to share a bathroom. That's
probably true. My sister would be like, this is not how Beezer and I always get along.
I mean, that's what I mean by brothers. This is the separated portion, right? If you weren't separated, then you would have all these conflicts from sharing a bathroom, sharing a bedroom, taking the last French fry on the dinner table kind of thing. But you reconnected as adults, so you've gotten over the prepubescent phases.
I will say just on the topic of families, my daughter, before she started teaching school after she graduated college, lived with my parents for about 4 months to save on rent. And after living with my parents, she said, now I understand all of your trauma.
Oh, that's awesome.
Oh my God.
Makes you feel seen.
That is savage. I hope your parents aren't listening to this.
So I will say, the gift we can give our children is wisdom, and Grace just checked that box.
Wise words. Wise words. All right. Chris, you answer the last one first. We're currently at $300 to $600 with Chris leading with $600. Ooh. I know. All right, Chris, you're next.
Let's go across the board to belly up for 500.
Belly up for 500. All right. So the question here is, what's something you once said to a GP that you regret saying?
I'm going to earn my spot back. This was actually something I then went and cried on the shoulder of Chris, and he told me, there, grasshopper. It's okay to be a newbie. You've learned your lesson. I think I actually shared this on your podcast, David. I was helping a manager figure out who to fundraise from, and I was being like the wonderful LP that I love to be by making introductions. And I was like, you are down the fairway, great for this other LP. They'll want to anchor you. They'll have a big check. I actually think I made this mistake twice. And I was like, blah, 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 all these things. And I helped them do it. And I helped them think about it. They pitched, they got it. And then I made my allocation request. And I think both times one time I got significantly crushed down. And one time just slightly less. And I was like, And Chris was like, there, grasshopper. Do not do these introductions to these big checked folks that are going to take the whole thing until you secure your allocation. And I was like, oh. So they don't just hold it for you out of the goodness of their heart. And turns out not always.
It's true. Not always. You gotta. There's a saying, at least I believe in Chinese, which is in Mandarin. The crying baby gets the milk. And so you've got to cry a little bit, so then the people know the mom, the dad knows to feed you the milk.
Well, and I also would say I should have been clear on where we were at and sort of pushed on it. So it was very good counseling from Chris on you, make make your wishes known. Don't be afraid to step up and speak your mind, especially when it comes to reserving allocation.
Amazing. This is probably the flip side of that question, which is like, I think it's that question asks like, what's something you once said, and this is what thing you did not say that you regret not saying. Chris, what's your story here?
Which do you want me to tell? That I regret saying or regret not saying?
What's the regret saying?
See, I have no regrets. So I've said a lot of
okay,
things.
Should have asked the other one
then. I'm glad to put my foot in my mouth, and sometimes for maybe even not the best reasons, but I regret nothing, because then otherwise I have too much anxiety. In terms of regret not saying, it's funny because I think in the last, certainly after 2016, 2017, up until 2021, I probably was more of a cheerleader for my GPs than I should have been. Actually, so maybe some of the things I regret saying were saying like, it's okay, like I understand why you would want to do that opportunity fund. But today looking back, I think a lot of those opportunity funds are going to struggle. And that's just one example of the kind of cheerleading that I think GPs expected of LPs during that era.
In all fairness, I think that's what a lot of GPs do for their founders as well, in the sense that there's a lot of cheerleading of like, oh, you should obviously raise on this increased valuation, obviously looks good on marks and all that. And there are other times like, hey, you should totally like hire this person. And there's this term that was thrown around for like a decade or so, maybe less than a decade, who knows? But the term of being founder friendly. And a lot of GPs understood founder friendliness as just agreeing with the founder, where real founder friendliness is like, I think it's I want to say that the attribution is a Pat Riley quote, which is Hall of Famer, basketball coach, NBA coach, and all that, which he says, and I'm paraphrasing here, a coach is someone who has you do what you don't want to do, who has you hear what you don't want to hear, who has you see what you don't want to see, so that you can be the person you were always meant to be. And I think that's probably the real founder friendliness out there, or GP friendliness.
That is such an inspiring quote. Like I feel like I need to levitate, but the thing I'll say is like, I almost felt like it was binary. Like either you were a cheerleader or a personal trainer. Now I say that never having done PT, but now I'm doing this like golf fitness regimen where there's like a bunch of PTs who are like making you do all these exercises. And man, now I understand why people hate PT. And I never want to go through physical therapy ever. And maybe those are the options that we're presenting on a binary basis. Maybe being a cheerleader is better, but somewhere in between, there's a happy medium.
I love it. All right, Beezer, you answer the last question, so I'm going to let you pick the next question here. What do you say?
Let's go down the line. Let's do portfolio construction for 500.
All right, portfolio construction for 500 here. What is the most interesting fund model you've seen to date? Beezer, you first.
Sorry, Chris. So we're probably going to have to bleep this out, but there is a fund that just
the best kind of comment.
Only because I don't have their permission to share, and I feel like I feel very sensitive about sharing fund names without their permission. So we can ask. But we've recently been spending time getting to know Pioneer Fund, which sits within the YC ecosystem and has a really intriguing model. Their business model is predicated on just investing in the top 25% of the YC batches each time. And when they walk you through how they do it, and their LP base has a significant number of YC alums in it, not only, but how they do this, and then their different math on like how the different YC cohorts produce. And I find it intellectually fascinating because it's a much larger, we typically invest in the, sort of a healthy concentration, lead investor, early stage seed or Series A type fund. And so this kind of model is just very, very different because it might have hundreds of, their seed level bets in companies predicated on a very specific ecosystem. So I find that fascinating. I don't know, in a whole range of different things out there, is it the most extreme? Probably not, but I found it. It's a conversation we had recently, so I've been noodling on it in my brain over and over.
I love it. There's actually, I want to say, there was a TechCrunch article recently where just to kind of fuel that model right there. And we might have to abstract a lot of this, but there's a TechCrunch article that there are only like 2 funds that have north of a 2.8% when it comes to unicorn rates. And I know that's not the end all be all when it comes to unicorn rates, because like you could have $20 million in revenue and still quote unquote be a unicorn, especially in the inflated periods of 2020 and 2021. But nevertheless, it's a proxy for just like identifying rockstar companies. And the 2 firms that had over 2.8%, and 2.8 is like Sequoia's number. The only 2 firms that had it were SV Angel, which I forget what the number sits at. I think it was a actually, I'm not going to say
no,
it. I forget.
I will give them accolades too. They have had some extraordinary runs, and I'm sure compliance will make me bleep that part out. But to their credit, SV Angel deploys a different model. They're not just YC, but they've also done I don't know, I'm making this up, historically 100 to 150 companies per fund, and they've had we can go through and look at it on PitchBook or Crunchbase. They have had a number of unicorns go through. It's been very impressive.
Oh yeah, I mean they had like Google, they had like a lot of the early kind of like
Pinterest,
crazy
Snapchat.
companies as well.
I'm blanking on it. I'm not doing them credit. They've had a significant number.
Right, and the other firm happened to be YC, which I think sits at 10%, at least according to the TechCrunch piece.
Yes. And you can reach out
Chris,
to
any thoughts?
him on Pioneer Fund and ask him if you want. He's a lovely person.
That would be great. That would be great. And also know they've written a lot of Medium posts that share what their calculus is. So hopefully they're open to it. But if not, we can bleep things out.
You know, I love sweat equity models. People that we have a manager called Rhapsody that does a lot of tech transfer and helps build companies around good ideas. And gets paid in equity as a result. And I think that's if you can find good stuff, that's a way to really leverage your fund arithmetic to get good returns. And then the other thing I think is like in terms of interesting, I'm always thinking about how we can get the purest exposure to things. And I've often thought, if you're a seed investor, and then you have, we spend so much time talking about reserves, et cetera, but like ultimately, like all you're doing is averaging up. And I think that's great because from a risk-adjusted, return standpoint, it's you might have a better trade-off, et cetera. But I gotta say, I love something like completely like naked, pre-seed exposure, like Charles Hudson, a precursor, right? Like it's a very distilled, specific exposure. And if you want like, kind of a raw exposure to that first, 0 to 1. That's probably an interesting, kind of model to get it. We're not investors, but I think the world of Charles.
And I also say, at least anecdotally speaking, between Charles and Mike Maples, they're like the grandfathers of a lot of emerging managers that are in market today, because a lot of emerging managers have taken so much wisdom from the both of them. Okay. That was Beezer. You were first on that. You stole it from Chris there. So what is the next question you'll pick?
Oh, let's do deals for 500. I know we're short on time, so we'll just go with all the big points.
All right, big points it is. All right, Chris, this is your time to get back into the game here. All right, deals for 500. Name a fund that invested consistently in the inflated valuations of 2020 and 2021, and you chose to invest or re-up in them, and why? Chris, it's a very targeted question. It's a loaded question.
I had to buzz in because, I got to get back in the game, for crying out loud. I've got to say, I love people who are steady Eddie and kind of lean out. So like you can push back and maybe not give me points for the definition of the word consistently. But I look at my boys at First Round, and everybody knows I'm the biggest First Round fanboy. And those guys were putting out money at a very steady pace, but at a slower pace than they had historically, because they just weren't seeing the value in the market. And as a result, really, we as an industry went to a 2-year, cadence, and those guys have stretched it out, kind of well beyond that. Because they've been very measured and disciplined, but yet still, put money out and even into some pretty high valuation companies with reserves that are, kind of crushing it. So super excited to continue to re-up there, and we'll continue to fanboy those guys to the end.
I love it. Beezer, any thoughts?
I think my challenge is I think most funds did that. I would be hard pressed. There definitely, we have some managers, to their credit, that slowed down. To Chris's point, they were like, oh, they saw what was going on either, in their sector or generally, and they were just being very careful. But nobody stopped. Or very few people stopped. And I don't think in this business you could sit out 2 years if you are a active, viable fund and stay and keep the brand alive and the connectivity tissue with the entrepreneurs. So I think the reality is everybody took the guidance of play the game on the field, and they all just tried to play it as smartly as they could. And time will tell how that worked out, right? And how the companies survived.
That's fair. Chris?
I was just going to say, and I'm not pointing any fingers, but a lot of money went into a lot of companies, and I think these are going to be some tough vintages. And all I can say is the best thing I ever heard David Swenson say is, may you be blessed with a weak benchmark.
Amen to that.
Oh, yeah.
Please too.
Talk about tweetable moments.
Yeah, I was reading the numbers for Q1 for 2024, and it's not starting out pretty. I'm hopeful that it will come back and go IPO market, but it's not looking pretty so far.
Yeah, and of course we're all rooting for everybody. We're all part of the venture industrial complex, but as the hedge fund guys on the East Coast say, Miller Motor Cars, which is the fancy car dealership in Greenwich, Miller Motor Cars doesn't accept relative performance, for lease payments on your Lamborghini. So we're all rooting for Moolah in the Kula, baby.
Moolah in the Kula. I freaking love that. I've used that term so much. It's now innately in my vocabulary. And people love it. They're like, oh, that's such a great term. And I was like, no, I can't take attribution for that. It's Chris Douvos at Ahoy over there. So if you want to thank anyone, thank him. You know what? I'll take the responsibility for a rookie question out here. But I love both of your answers, because there are some great nuggets to think about. And a lot of it is in deploying into the market, there's a lot to say about time diversity as well. It's really hard to time markets in general. And even though currently hindsight with in quotes, right? That it looks like it was really high prices for still some great companies, because innovation is secular to macroeconomic trends, that we're still going to see great companies coming out of those vintages.
I don't doubt the innovation part of it. I think the question is, and this is cheating into a portfolio construction answer. If the portfolio construction's off, given where you invested, you could still invest in a great company and not make money. And that's from an LP perspective that is looking at some level of monetary return. I'm trying to think of an IRR could still be going up if there's never any money back. I think eventually it will come down to. It's part of the math. And I think that's the biggest challenge of those years isn't the creativity in the companies. It's what's that going to do for everybody, you could write a scenario where the IPO market opens up and we get back to a $10 trillion company is no big deal. But some of these companies are going to need a very, very healthy market for that to occur.
I hear you. I mean, in the simplicity of the math there, I'll handle Chris because I think Chris unmuted for just a second. If you invest in a $500 million valuation company and they exit at $1 billion, technically it is a unicorn, but you didn't get much of a markup there. And it's not much of a fund returner there either.
Hey, I've got, I just regurgitate quotes and pretend to sound smart. Two Buffett quotes are great for this. Opportunity equals value minus perception, right? And the value is a intrinsic thing, and but we price companies on perception, and so as these valuations get really big, the opportunity shrinks in that equation. And then the other Buffettism is, he said, feel free to fall in love with companies all you want, just don't fall in love with the pieces of paper that represent a fractional claim on their net residual assets. And I think that's a problem that I think is particularly acute in our seat. Is I think we see our GPs get excited about companies and what those companies are doing and changing the world, and that's all great. But at the end of the day, the return on an asset is a function of the price you paid for it and the the capital it consumes. And oftentimes LPs get stuck on the hind teat on that one.
Chris, have you ever considered a career in rap or hip hop? Just out of curiosity.
I grew up in Brooklyn in the 80s, and I just got to say, my main KRS is, how many MCs must get dissed before somebody says don't mess with Chris?
All right. This
That is
episode is the
awesome.
debut of Chris's rap career right here.
That is awesome. I can't wait to hear the rest of it.
Oh my God, you were so good at this. All right, I want to, given the sensitivity of time here, we won't cover all the questions, but I do want, Chris, because you answered the last one, let's pick one of the ones from the 300 tier, and depending on who takes that answer first, we may have a winner, because currently we're sitting at Beezer for 1300, and then Chris, you're at 1100. You're 200 behind Beezer. So if you take this cake, then you can win, but Beezer might pull across.
Let's go with Belly Up for 300.
Belly Up for 300. All right. Name a GP or LP's event that you went to once but would never go to again. You can define your reason here.
I literally this is a non-answer, so I think Beezer's going to win this, but I literally just told a story at the breakfast I just came from about a meeting that I went to that had a hot tub event afterwards, and I show up at the hot tub, and people said we were going hot tubbing, so I didn't have any swim trunks, so I put on like my Under Armour shorts, for my workout that morning, and I walk over and everybody in the hot tub is naked, and I'm like, oh, I didn't realize we were going California style, and they go, yep, drop the drawers, and I got in this hot tub with 25 LPs and GPs, and I'm never going to go to that event ever again because I've seen too much.
Wow.
Okay, not invited to those events, so I don't have a good spicy answer to that question.
You know what? I'll have to give it to Chris then. No name drop in here, but that is I don't know if I'd go to that. If I was invited to that, assuming that I knew it was drop the drawers from the get-go, I don't know if I'd go to that. It's a little bit too comfortable for my liking, personally.
Was that a co-ed situation, and was that recently?
No, this is actually in like 2002. I don't know if stuff like that happens anymore, but I'm still scarred by it 22 years later.
Legit. And I'm just going to dive. I was going to make a bad pun. It was a co-ed situation, yes.
It was a co-ed. It was a surprisingly co-ed situation.
And this was not like, say, in a different country where there might be, I don't know, plunge pools and a different cultural aesthetic around it.
It was
exactly
not.
What it sounds like.
It was not. Oh my God, I'm having PTSD.
It's okay. Your face can't get as bright as your shirt here. So your shirt has demystified like how tomato red your face can be. So you're good. And for those watching, for those listening, in case you're not watching, Chris is wearing what is this? It looks like on my screen looks like a salmon pink OpenLP shirt, which both Beezer and Chris are wearing. Beezer with the black one.
We did try to get Chris a red as red, and we're gonna have to work on our swag game because it did not come out as red as it should. But
it's been washed a few times, so it's been in heavy rotation.
We're gonna fix that.
It's been used, and that's good. That's a good sign, because Chris, as he said, worked it into rotation. Okay, we are at. I want to be cognizant of time here. This is so fun. Given that Chris took that last question, Chris is in the winner here. Congratulations. You get bragging rights. And so when this episode goes out, you can be like, I beat Beezer on something. That could be the tagline. It's like, Chris beat Beezer on a trivia game or whatever it is.
For the first time ever, because Beezer's the best. And I think I'm here for a rematch anytime.
I love it.
Excellent. So much fun.
All right, we want to settle on good blood here, so I'm going to round it out with like one more question if you're fine with it. But just to kind of get to, as you both know, as you've both been on the pod already, one of the things I really love to do is just to highlight a little more of the humanness in kind of like the LP landscape. And both you, I mean, if people can't tell through this episode yet, there is so much human in both of you, and that's why I love both of you. But Beezer took my question from the get-go. So the question was originally going to be like something that the question was originally going to be, if you had to do a TED talk on anything but VC and LP know-how, what topic would you cover? And I feel like Beezer would say marine biology. So instead of asking that question, I'm going to flip that script over here, and I'm going to say, like, if you could pick 2 lessons in your life to canonize in a time capsule, which 2 would you pick? And in this case, I'll start with Beezer first, then Chris.
Oh God, can Chris answer first? I need time to think.
Okay, Chris, you go first.
Sure. I have better answers, but this is this is one that I think about a lot, because I think about my immigrant dad, and everything he learned about being American, he learned from watching the Godfather movies. So he says these things that are kind of full of immigrant portent, that you don't really know what they mean, but then later you understand them. And he always used to say to me, he goes, "My son, where you're going, I've been." And I, we laugh about that a lot in my family. Where you're going, I've been. But it actually, is, as I've thought about it more, and as I've had kids, it made me realize that everybody in life has their own experience set, and you have to respect people's journeys, and you have to kind of meet people where they are. There's just a lot to kind of unpack there around the interactions that we're having, and with different people, and why you should respect people, and the things that you can learn from people, and the things that you also have to teach in a humble way. And so that's something that over the 40 years in which I've been thinking about that has really kind of changed from something silly to actually maybe something that's interesting. And then the other thing that I actually just learned from my son. My son taught me the word Sonder, and I know Sonder as a venture-backed startup. But Sonder is actually this word, which I guess means understanding that people have their own rich lives, and that you are not, you're but a drop of water in their, kind of own ocean of their own lives. And that actually really threw me, because I've been really cranky lately. I've been salty AF. And one of the things I've been saying is everybody around me is a bot, right? For those of you who don't understand what an NPC is, we're just surrounded by NPCs, right? Non-player characters, these people that just kind of go and they're running out the algorithm. And that's why the person at the cable company is so cranky to me and everything. And then when Taylor, my son, said, "Dad, you really need to think about Sonder a little bit," it blew my mind. And so there are a lot of business anecdotes, and Beezer throughout one of my favorites, which is investing. You'll never be right and alone if you're afraid of being wrong and alone. So you have to invest without fear and invest courageously. All that stuff. There's a lot of business stuff, but the more I think about it, the business stuff's a commodity. It's the life stuff that hits different.
Oh man, so I actually learned about the word Sonder fairly recently as well, and the definition I was given, I actually wrote this down in my notebook, which was while I was flipping through the notebook earlier. Can't really see it. But one of the description I was given, the definition I was giving, was the feeling when you realize that everyone, including strangers, have a unique life just as complex as your own, each with love, problems, and ambitions. And to be completely honest, I thought it was a tech company as well.
It's actually a beautiful thing when you think about it. And I grew up in Brooklyn, and I grew up really, poor, and my mom always taught me, she's everybody's always out to get you. Somebody's always trying to get over on you. And and as I've gotten older, that's metastasized into thinking that everybody is an NPC, just kind of there to, annoy me in this grand simulation that we're all living in. And then, that's such a beautiful, thing to kind of ponder. And I'm going to, kind of sit in my office in the dark and think about it a little bit after this recording.
turn on the shades, turn off the lights, hide in the room without any natural lighting. Beezer, go for it.
I think I have a lava lamp somewhere in the office, so I'll turn that on too.
Of course you do. I love it.
That's oddly meditative, but I love it. I need a lava lamp. Speaking out of curiosity. All right, Beezer, any thoughts on what time capsule lessons you'll have?
I'm trying to think if my father never had a phrase, but in going on the trend of lessons we learned from our fathers. So I don't think I've ever talked about this. My father had a degenerative nerve disease, sort of like MS, but not as debilitating. It doesn't kind of get to your lungs. So he was physically deteriorating throughout my life, but could walk most of it. But at the end, was having a much harder time and couldn't really use his hands and feet. And he along with that, he also had a series of ups and downs in business. And one of the things I observed was that and sometimes the downs were at his own doing because he just screwed up and made some bad business decisions, was that he kind of always came back. And there was this incredible resilience of like, I'm just going to refigure out a new way to do something, even if it's also not going to work. Like, I'm just going to keep coming back and swinging. And this sort of persistence of like, I'm just going to keep figuring something out. And he also was an immigrant. I don't know if that's correlated or not, but he was. And so is my mom. And it's this really powerful thing when people like, there's just always another way of looking at something and doing something. And this is a little bit why I think I'm with Chris. Sometimes I get a little cranky and salty when people just complain and then just don't figure out a way through. And I'm like, well, okay, like this might suck and that might not work, but like, what you gonna do? Right. And I don't know, that's one of the things I think sort of figuring out what you're going to do is just, he taught very powerful lessons around kind of consistently figuring it out. Again, it didn't always work, but still the attitude was right.
I love that.
I love it too. To echo on that, actually, it reminds me of something my 6th grade math teacher once told me. And I remember I got all the answers right. And one test, he gave me a 90% instead of 100%. I was like, that makes no sense. I got all the answers right. And he was like, first of all, David, your score's too high in the class already, so it's okay. It doesn't matter. And I was a nerd. At the period of time, I was just like, I got everything.
Grades aren't relative. Like, that would make my head blow up.
Right.
Like,
I mean, it made my head blow up. But there was a lesson which now lives rent-free in my mind ever since. And what he said was, David, it's far more impressive if you can solve one problem 5 different ways than solve 5 problems one way. And that's like, and to his credit, what he ended up doing is like, hey, if you can take just one of these problems and solve it a different way, I will give you your 105%. I mean, speaking of just like how wishy-washy grades are back in childhood, like 6th grade, but nevertheless, that got me thinking in a lot of ways. If there are multiple ways to solve a problem, that sounds like it echoes what the lesson that your dad had for you, Beezer.
Yes.
That's
and
awesome.
I'm trying to think of wisdoms that my son has. I'm sure he has lots of them. But recently, so he's had a growth spurt and he is now probably a full head taller than me. He's 16. And so recently he's just started calling me small. So I'm now embracing the word small as a beautiful translation of I love you, Mom. Don't know if that's what he means by it, but I'm going with it.
There are lots of memes and videos online about the advantages of being small. Apparently, small people also live longer than tall people.
Huh. All right. Yeah. I'll let you know in 100 years.
Let me know. All right. Anyways, we're at time here. Both of you, thank you so much in terms of sharing all the nice tidbits. And as one last place, and I know we've kind of echoed this before in previous episodes, but if people had, if all of your social media and contact methods were taken away and you can only pick one of them, what's the one method that people should find both of you? Chris, you want to go?
Oh, I don't know. I used to say Twitter, but there's Cory Doctorow talks about the enshittification of platforms, and Twitter's in like its full enshittification. I feel like engagement's way down and all kinds of stuff. For my friends, it's Insta. And then I guess, you know what, maybe somebody said maybe LinkedIn ends up being the last person standing. So, for business folks, that might be the answer going forward.
Get it.
I have to agree. I was going to say Twitter too, but I constantly feel like people have disappeared, or they're somehow the algorithm is shifting because there's people I've followed for years and I can't find them and I have to hunt them down. Ditto on LinkedIn. I don't know, sometimes email. The old standby. It's fine. Beezer at SapphireVentures.com.
And Chris at ahoycap.com. It's old, tried and true, right?
Tried and true. It's the last bastion of communication. I'm going to let both of you go here. I'm going to end the recording here, but also both of you, thank you so much for humoring me for this one.
Thank you guys so much. This is super fun.
Super fun. Let's do it again.
I'm here for it, but just don't make me learn any new dances. I had to do all the dances with my kids on TikTok when they were growing up, and my biggest life relief is that I don't have to learn any more dances.
Oh, yeah, my son banned me because they do. He doesn't do TikTok dances. He
he's going to hate me for saying this out loud. They were doing the Fortnite dances, like the floss and like whatever those things were. And he was like,
oh yeah,
you may never, ever do this. And I was like, okay.
It was a thing during the pandemic though.
I wish I wish I could zoom out and I could do the.
Oh man, you are good.
Okay, so David, you're now capturing the origins of OpenLP. This was me and Douvos at the Creamery chatting away about, I think we were supposed to be having a very structured conversation about a GP, and I'm sure Chris was saying incredibly intelligent things, and I was asking questions to learn from him. And somehow it devolved into something else, probably my fault. And Chris was like, people are dying to know what LPs say. We should capture this. And there is the launch of OpenLP.
Yeah, that was it. I was like, we could do a podcast and like have the creamery plates clinking in the background. So it sounds like really authentic. But alas.
Hello, Superclusters fans. You've seen the logo at the beginning, and now we're here to address the elephant in the room. And the big question is, how intertwined is Superclusters and Alchemist Accelerator? And the truth is, Superclusters and Alchemist Accelerator are two completely separate entities, other than the fact that it is only I, David, your host, who is able to traverse between the multiverses. And so the reason Alchemist is a sponsor for Superclusters is the same reason why I ended up joining Alchemist. And it's for two reasons: the team and the product. So let me elaborate a little bit. For the team side, I was doing a bunch of diligence, homework, reference checks before I joined Alchemist. And I stumbled across a story which was between Ravi and an early team member of Alchemist. And for the sake of this story, I'm going to call that person John. So Ravi and John were working late at night because they had a deadline coming up. And as they were about to leave, Ravi found out that John didn't have a place to stay and had been sleeping out of his car the entire time. And the next thing Ravi did literally blew my mind, which was Ravi gave the keys to his place to John and said, "John, you're free to stay here for as long as you want." And I knew instantly that this is the team I wanted to join. This is the culture I wanted to be a part of. The second thing is the product itself. Alchemist has built this really robust product called the Vault. And it is the epitome of Peter Drucker's infamous line, which is, you cannot manage what you don't measure. And so for the uninitiated, what is Alchemist Accelerator? Alchemist Accelerator is your startup accelerator for companies that monetize from enterprises. And so don't take it just from me. We've backed incredible companies, including names you've heard of, LaunchDarkly, Prevacera, MoEngage, and we're also backed by some incredible LPs and investors, including Khosla Ventures, Mayfield, Salesforce. And now, between you and I can't share any of the numbers, and if I do, our compliance officer, will literally gobble me up for breakfast, lunch, afternoon tea, and dinner. And personally, I'm too young to die. But I will say, the numbers, they're great. Like, they're really great. And so if you're curious and want to get involved in Alchemist and the ecosystem, check out alchemistaccelerator.com/superclusters. And that's superclusters with an S at the beginning and at the S at the end. And we'll also include these links in the notes. Hey Superclusters fans, this is David from Post and want to share a few things before you go. If you're tuning in from the YouTube universe, and if you like this episode and if you want to see more of it, consider subscribing. It's free. Let us know down in the comments which LPs you'd want to see next or topics you liked and want to hear more of. If you're tuning in from the audio universe on Spotify, Apple Podcasts, or wherever content finds your ear, and you liked what you heard, give us a follow. And lastly, want to share a quick disclaimer from our legal friends. While I am the head of investor relations at Alchemist Accelerator, and that Alchemist Accelerator is one of our proud sponsors, the views expressed in this episode are for informational purposes only and are solely the views of myself and the guest alone. They are not representative of Alchemist Accelerator. None of the views expressed herein constitute legal, investment, business, or tax advice, and any allusions or references to funds or companies are purely for illustrative purposes only and should not be relied upon as investment recommendations. Consult a professional investment advisor near you prior to making any investment decisions. And that's all from me. See you on the next.